Now let's bring in our next guest. It's going to be Diane King Hall. She's my co-host on Fast Market. But Diane, we've got some individual stock stories to take place here. American Express stock was popping a little bit post-earnings after some consolidation over the last couple months. And this is all on the back of earnings. What do you got for us?
Yeah, I mean, it looks like the strength of the well-heeled is playing out very well for American Express. They did better than expected on both the top and bottom line. Revenue topped $18.4 billion. That's up 11% for that figure. It was better than expected. EPS coming in at $4.14 a share. That also topped expectations. You had this growth that was fueled by higher card member spending and, of course, rising card fees. You think about that Refresh Platinum card. That card is expensive, Tom. It comes with an $895 annual fee, so it's more expensive than that Chase Sapphire top of the line card that they have, which their fee is $795. But you can see that consumers for American Express are still sticking with that card, and you had growth there. They said there was strong adoption and an increase in demand for the Platinum card, so you had strength there and the refresh there with the consumers still liking that card and liking the perks that go along with that and still being willing to pay up, utilizing and swiping the plastic over there. The CEO calling the demand for that, quote, beyond expectations. So it just plays out in terms of the conversation that we've had about the strength of the higher end consumer in the economy. So American Express adding to the gains it's had year to date. You mentioned the recent consolidation period, but it has been a gainer for this year. It had been trailing the S&P 500 a little bit, but not too far behind the S&P 500. Still, it has to fend off rivals like JP Morgan Chase, as I mentioned, that Chase Sapphire card that it has to keep up. Obviously, it's launched that premium card. It's also been trying to reach the richer, younger people as well with that. Now, costs did climb. Earnings rose faster. Total cost climbed 10%. That was slightly above forecast, but investors are willing to dismiss that now. And overall, again, the CEO noting that expenses grew less than earnings did. Tom?
Yep. It kind of is reflective of the affluent consumer out there still spending, holding up the economy at this point. As we see GDP estimates continue to rise, we're heading into that strong, historically strong fourth quarter also. But Diane, let's pivot to the next stock, and it's been the stock of the day, and we typically don't, put regional banks at the top of the list, but we're seeing gains in Zion Bancorp after 13% losses yesterday, and I saw the stock got an upgrade. This was causing all the consternation yesterday in equity markets and even this morning, but quickly reversed.
Yeah, listen, I mean, this reminds me of 2023 where you had regional banks under the microscope. So they're back under the microscope again this time. This was after disclosures of alleged loan fraud that rattled the sector. They've come back some now. Zion's today up more than 2% at the moment, had been higher in the pre-market. It had been up as much as 4% in the pre-market. But keep in mind, you saw a double-digit slide in Zion's and other banks yesterday. Now, Zion's, it lost ground after its California Bank and Trust unit wrote off about $50 million tied to a syndicated loan that's under investigation now that wiped off roughly $1 billion worth of its market value. Analysts, though, say that reaction was overdone. Baird upgrading that stock to outperform today, calling the magnitude of the pullback excessive, especially because it was just $50 million. And so he sees it as they see it as an opportunity for long-term investors. But it adds questions over the sector about credit quality, especially across smaller lenders. You were talking to Kevin Hinks earlier about this, and he made the point, and it's clear that not all regional banks are created equal. But there is the worry now, and JP Morgan Chase analysts put this out saying there's this approach now, sell first and ask questions later, because investors don't want to get caught flat-footed like they did in 2023. And there were those worries about the regional banks and potential contagion effects. So now that, that was in play again yesterday, right? Is there more, are there more issues to come, especially when you think about Tricolor? And the comments that JP Morgan Chase CEO Jamie Dimon made earlier this week about exposure and, to use the phrase that has been tossed around as cockroaches, right? You know, where are the cockroaches in all of this? But it looks like there's some cooling and pulling back from that. You know, in fact, you have Fifth Third Bank out today with better than expected results, and you're looking at a lot of the regionals doing higher. Quick personal aside, Fifth Third was one of my first grown-up jobs, Tom.
There you go. Yeah, Fifth Third having a nice day. COF having a nice day. Some of the other regional banks having a nice rebound day here after some losses yesterday and even this morning pre-market. Diane, final story that we got, Google Alphabet. This has been the Mag 7 name that has silently gone to all-time highs just yesterday before falling with the overall market. But, you know, that death of search going away relatively quickly. That was the theme throughout 2024. As it struggled, it was the cheapest Mag 7 name, but now, hey, we've got over 30% gains in this one this year.
Yeah, and it's got another vote of confidence today, this time from Guggenheim. Guggenheim is raising its price target to 280 from 210, so a big move there in terms of where they see shares going. They keep a buy rating on it, so they're very constructive on this one. They say the digital ad market looks steady heading into its earnings, into Q3 earnings. They think players like Google, Alphabet, and Meta will capture more ad dollars. They think that the higher valuation for Alphabet gives it a slight premium over other tech names, and it just, to them, it signals growing confidence in advertiser demand. And they also see, of course, we've talked about this before, this is the less risk from the antitrust overhang. And, you know, we've heard other analysts talk about this because, you know, now that that's essentially in the rearview mirror, that takes a cloud that was hanging over Alphabet, Google for some of this year away. So it just makes them even more constructive on and more bullish on Alphabet, Google, Tom.
Yep, we're going to continue to watch that as stocks are trying to get into positive territory. All right, great breakdown for us. Thanks to Diane King Hall, my co-host on Fast Market.